faces many problems, like a $23 trillion national debt and growing. And the dollar is being sold at a rapid pace by central banks around the world in form of treasuries. And Congress is overspending with deficit spending at $1 trillion as far as the eye can see. And on top of that, it doesn't matter who's in the White House, a Democrat, a Republican, or possibly in the future, an independent. We will continue to spend into oblivion. But you know, on the other hand, in a recent poll, 92% of Americans, both Democrats, Republicans, and independent, all said, we have to stop this nonsense. We have to get our house in order, balance our budget, pay down our debt, and stop the insanity. Because many of them believe that a crash is coming of epic proportions. You know, some people think that all the things I just described is just a state of mind, while others, those that are in the know, like billionaires, hedge fund managers, and central bank managers, all know this is not going to turn out well at all. But you know what this does? This just comes down to reality. And the reality is, if we don't do something about this, there will be, in the very near future, an epic crash, and it will affect all of our lives. And many people are saying now that this is a problem like never before. And that is what we're going to talk about today. So thank you for tuning in today. I'm David Fisher, the CEO of Landmark Capital. In that series, you're going to see a big trend that changed. You're going to see in 1971 how Nixon took us off the gold standard and how that's delinked gold from the dollar. And you can see how the decoupling effect started to cause severe problems financially for our country. And then it perpetuated in the early 80s. A new theory was implemented called MMT, Modern Monetary Theory. You'll see the ramifications of that, and we explain actually what that is. And you'll start to see the trend from Reagan all the way through to Democratic presidents, Republican presidents, until we get to today, how the debt has escalated under each president. So I want you to make sure you understand those things and how deficit spending is like cancer to a country. Now we are currently at all-time highs with our national debt. We're at $23 trillion. We're at all-time highs of a budget deficit at now $1 trillion. We're at all-time highs in the stock market because why? The Fed's balance sheet is close to all-time highs, so it's funded and fueled the market. The dollar is at a 33-month high and continues to rise. Gold is on a rampage also, just starting in its early bull market. But we learn what $1 billion is. $1 billion, that's the all-time high payment every day of the national debt. Think about that. We are paying $1 billion a day just to pay for the debt on interest of our national debt. So many people say, why don't we just cut back spending? That seems the admirable thing and logical thing to do. Well, let's take a look at the chart here on a budget from 2018. You're going to see how that's kind of a challenging thing. Looking at the 2018 budgets, the closest chart that we have to what is happening in our budget today of 2020. When looking at the chart there, the federal budget was $4.094 trillion. The current budget this year is 4.746. The national debt interest back then was 7.4% of the budget. Defense was 15.6%. Mandatory spending 65%. What mandatory spending is? Social Security, Medicare, Medicaid, government pensions. Those are the unfunded liabilities, which keep on growing. So it's really kind of an illusion saying 65% of the budget goes towards those areas. It's still not enough money going into those areas because the unfunded liabilities keeps growing. So when you add all this up, the budget represents 88% is what is a fixed budget. And let's put this into perspective. Congress votes on only 12%, and this is one of many reasons why you're going to see Congress and our government just to continue overspend. So cutting back is really not an option because of the way the budget is operating percentage-wise. But let's take a look at what some experts are saying about the budget and the debt. Larry Summers, he warns about the most toxic debts back in 2016, April of that year, CNBC, and he said this: "You're doing it in the wrong way," he said, "because say what you will, the debt that we issue in the regular way compounds at a rate under 2%. On the other hand, when you defer maintenance for a generation, that compound far faster." So in other words, we put this on the debt structure. It might be okay at the beginning, but then it starts to accelerate and compound. He goes on to saying this: "We need to think about our fiscal health in a much more holistic way that recognizes that the worst and most toxic debts are the debts of underinvestment," Summers said. So in other words, we're not getting our bang for the buck. Like I said, for every $3 we spend on a government level, we get $1 in return of economic growth. It doesn't work. Let's take a look at some more experts, what they're saying. Our own Fed chairman, Jerome Powell, said last year, quote, "The federal budget is on an unsustainable path with high and rising debt." Fortune magazine in February of 2018 said the title, "Why America's About to Pivot from Cheering the Economy to Fearing the Debt." Jim Rogers in Forbes magazine 2018 was interviewed, and he's a founder of Quantum Fund. He's a billionaire investor, a man that's spoken out about the debt. He said this, quote, "When we have a bear market, and we're going to have a bear market, it will be the worst in our lifetime." Quote, he said on Bloomberg News, February 2018, also quoting, "Debt is everywhere, and it is much, much higher now," end quote. Another Fed chairman, previous one, Greenspan, said this in 2019 on Bloomberg News. Greenspan warns of an extremely imbalanced path of the U.S. deficit. Another Fed chairman, Ben Bernanke, in 2018, talks about the economy. The title is "The U.S. Economy is Going to Go Off the Cliff in 2020. That's this year. Bernanke said that while the stimulus is going to hit the economy in a big way this year and next year, and then in 2020, Wile E. Coyote is going to go off the cliff and it's going to look down. Another well-respected gentleman, Ray Dalio, says 2 years ago that the U.S. is 2 years from a downturn in Bloomberg News. Ray said this, quote, "In my opinion, we're near the end in the late stages of our reserve currency system. It's a fiat monetary system. Not only do we have negative rates, but we're going to have much higher deficits. And that's not half the story, because the larger story is the unfunded liabilities. Those are pension liabilities and debt liabilities." The IMF also is sounding the alarm. They said recently, "The alarm on global debt warns United States is standing out." The G20 said this, "G20 must heed global debt warnings to stave off another crisis." They said this in 2018. Now, warning signs are flashing that another debt crisis is approaching, with concerns being raised not only by developed campaign groups, but by the International Monetary Fund and also World Bank. What did World Bank say? The headline says World Bank warns of global debt crisis amid borrowing buildup. So it's not just a U.S. problem, it's a global thing. Here's what was said. Current debt wave is largest, fastest, and most broad-based since the 1970s, say economists. The World Bank has highlighted the risk of a fresh global debt crisis after warning of the biggest buildup in borrowing in the past 50 years. The IMF says in 2020, IMF chief warns global economy faces new Great Depression. During a speech at the Peterson Institute, IMF chairwoman Kristalina Georgieva, she compared the contemporary global to the roaring 20s. In other words, what it is now back to, remember the roaring 20s, right before the crash of 1929? She said the roaring 20s of the 20th century, a decade of cultural and financial excess that culminated in the great market crash of 1929. According to The Guardian, the research suggests that a similar trend is already underway. When it comes, it will be impossible to avoid. CNBC article, January of this year, World Bank warns of a global debt crisis following the fastest increase also since the 1970s. So this is a problem that not just the United States faces, but the world. Look at the chart there, the countries that are in red. Let's focus back into now the United States. What is the fix? Well, let's take a look at a few of them. Steve Mnuchin, Treasury Secretary, said this last year, and Reuters picked up the article. The title says, Treasury Chief says U.S. seriously considering ultra-long bonds. August 28, 2019. The article writes, Treasury Secretary Steve Mnuchin said on Wednesday the possibility of issuing ultra-long bonds, U.S. bonds, is under very serious consideration. Quote, if the conditions are right, then I would anticipate we'll take advantage of long-term borrowing and execute on that, end quote, Mnuchin told Bloomberg in an interview. Mnuchin said his renewed interest in a 50 or 100-year bond, check that out, 50 or 100-year bond, ridiculous, was unrelated to the drop in yields on shorter-term U.S. debt, Bloomberg reported. So let's stop and think about that. We can't get enough foreigners to buy a 5-year bond, a 10-year bond, a 15-year bond, a 30-year bond. So let's issue a longer-term 50-year or 100-year. Let's entice them with long-term maturing bonds. The problem with that is that investors don't want to tie their money up for that long. They don't know what it will look like in the economic environment. So I'm going to venture to say this idea is probably not going to be embraced by Wall Street. And shortly thereafter, we saw Wall Street kind of say, no, that's not something we would buy. So these gimmicks by the Treasury Secretary is not the first time. If you remember, there was a previous Treasury Secretary that said, let's issue $1 trillion coin and sell the coin and see who wants to buy it. And obviously that wasn't an idea that worked either. So let's take a look at what the real solution should be. And that it revolves around gold. Let's take a look at some articles. 2019, the wealthy are hoarding physical gold. It says the world's rich are hoarding gold. This, according to data buried in a recent Goldman Sachs note to clients. February of 2019, Forbes says central banks haven't bought this much gold since Nixon closed the gold window. Let's go back and see if we can re-implement backing the dollar by gold once again. Because President Trump has a lot of ideas and does embrace gold. And I'm going to have a video specifically on that coming up. But let's talk more about what central banks are doing. Central banks' gold purchases in 2019 surpassed last year's 50-year milestone. 2018, 651 tons were purchased. In 2019, 17 more tons were purchased, 668 tons. There's a lot of countries that are buying gold. Hungary, Poland, Germany, the Netherlands, Japan, Switzerland, Turkey, the Philippines, just to name a few. But the two countries that their central banks have purchased the most amount of gold by far is China and Russia. Why? Because they want to attempt to dethrone the US dollar and create another alternative currency, the Chinese yuan, to compete with the US dollar on various levels, especially in the oil market, which Russia is one of the largest producing oil countries in the world. So that is one of the fixes. There's a few others we should talk about. So going back to the red hockey stick in the first video, you can see by running the cursor over the timeline, 1971 is the year that Nixon closed the window for gold and delinked gold from the dollar, which caused, or was maybe one of the major contributors to, a debt structure that overtook our country that's now completely unmanageable. So if we took us off a gold standard, what would happen if we put us on a gold standard? Well, many experts say that's a plausible thing. President Trump does like gold. In fact, I'm going to have a YouTube video in depth on his thoughts on gold. So look for that in the near future. But let's take a look in closing at some other ideas on how to fix the debt. The various ways of fixing the debt bubble: we could just default on our financial problems. That's an idea. We've never done that before. I'm not embracing it. What would happen? It'd cause financial havoc. But we would no longer have any obligations. That would be the worst idea to do. We can do what history has shown to work, inflate our way out of this problem.
The massive increase across the whole economy. So the economy, as I've said, we are in a recession where now people will not be able to afford the demand for goods.
We would have to have much more severe inflation than we experienced in double digits in the 70s of interest rates. It would be closer to Weimar Germany with hyperinflation. Many economists saying that's the route that would fix this problem. It would have severe consequences, unfortunately. There's a new idea that's been not only talked about, but it's done around the world, and laws have been passed in the United States called a bail-in. If we implemented a bail-in, that would fix a big portion of our debt structure and get us back on our feet. Many people wonder what that is. That's an upcoming video, probably the next one you will see. We'll go in depth about the laws of a bail-in, how it works. It would have some challenging aspects to it, but it would probably be one of the best fixes, financially speaking, and it caused the least amount of turmoil. I don't condone that behavior, but it's certainly not just an idea anymore. It is laws that have been passed, and it's a viable option by our country.
It's not easy to explain, because before 1 month you are a rich and now you are a poor man.
Of course, my advocacy is get us back on a gold standard, back the US dollar by gold. That would, if any of these things were to be implemented at any moment, the ramifications would be multiple. It wouldn't be an immediate fix, just like we didn't get out of an immediate problem the detrimental downturn in the financial markets in 2008. It took quite a few years. But if any of these plans were implemented, any one or a couple of them, the one thing we can conclude, it would cause gold to rise precipitously. Many economists saying we would see gold into the thousands of dollars. What I'm not saying is gold is a get-rich-quick scheme. It's a financial insurance policy and also a good asset to hold for investment purposes. But it's not a get-rich-quick scheme. But if we saw these principles, these ideas being implemented, it certainly would cause gold to rise aggressively. So my theory is, I'd rather be 2 years early than 2 days too late. We have a wealth of knowledge from my team here at Landmark Capital. I encourage you to call my team and learn more about this and get the perspectives for yourself on what we call a financial blueprint, how you can learn what is best for you in an education. We go over a thing called the 3 columns. If you've never heard of that, then maybe you've never been properly educated about the gold and silver markets. So thank you for tuning in today. If you like what you heard today, make sure you push the like button and then hit the subscribe button so you make sure you get the next video that's coming about. But to get the alert, push the bell button so you get that notification that comes to you so you can hear what the next pertinent video is about. So I want to thank you for listening in today, but I have a question before we finish. Do you think this global debt bubble, or the government debt bubble, is going to burst like the corporate debt bubble might be a high probability of that in 2020? Or do you think it's going to happen in 2021? Or maybe you think it will never happen. Give me your thoughts. Tell me what you think would trigger this next financial crisis, because it's not if it's coming, it's when it's coming. So I want to thank you for tuning in today. And remember, if you take care of your money now, it will be there to take care of you later. Have a great day.